Welcome to Your Home, Your Move. What's happening in the Los Angeles real estate market? My name is Luis Sanchez. Right now, this is being played streaming on my Facebook business page, and then from there, I'll put it to my other channels. The goal here of my channels is I'm a real estate agent and broker here in LA County, and also work throughout other surrounding counties. And the goal here is to provide you with up to date information so that you can make informed decisions to meet your real estate goals. So, with that being said, we'll begin right away. Today, I'm going to be going over some updated market stats. I'm going to go over some database reasons to buy, and then why people are selling even though they have a below 3% interest rate. So, with that being said, we'll go straight to the market stats. So, price. The price last month was at the highest price it ever was at 910, and this last month in April it decreased. In May it decreased to 900,000. That's a 1.1% drop, and a 0.9% drop from last May at this time. So 1% is not a big drop. If prices continue to go down at 1% over multiple months, that could be significant, but 1% is not a big drop. According to the Association of Realtors, the reason for the dip in prices may be elevated interest rates, insurance availability and affordability. Insurance rates had tripled just a couple years ago, and now with the fires, I'm sure I haven't gotten insurance, but I'm sure it's going to be increased. Economic uncertainty with the tariffs and home sellers' willingness to reduce the prices. So a home seller will market value means when a property is put on the open market, everyone has a chance to see it. It's not in default or foreclosure. They're not going to lose it. Everyone sees the property, the price that they offered. That's what market value is. So home sellers, I guess in the previous month, a lot of them reduced their prices because they put it above the market value and they had to reduce the price. And the prices were still selling at record numbers, even though there's so many reductions. Okay, second stat is showing that job stability and income expectations have improved. According to the New York Federal Reserve survey of this last May, there's improved expectations and perceptions of people in the workforce. The chance of losing one's job in the next 12 months dropped to 14.8%. The perception. The perceived probability of finding a new job rose to 50.7%. So an increase, positive. More people are expecting that their incomes are going to increase by 2.7%. So these positive perceptions of people, positive expectations that they're going to have stability in their job, their income is going to improve, that potentially could lead to more buyers coming onto the market. We will see. The third stat I wanted to go over is the foreclosures. Foreclosures are remaining stable. Right now, in last month, there was one in every 35,015 housing units had a foreclosure filing. If you divide that by 12, that's one by every 292 properties or units in for the year. Now, if you compare that number is kind of like an abstract number. If you compare that to the downturn in the quarter 3 of 2008, there was one in every 130 housing units. If you divide it by 4, one in every 32 homes was in foreclosure. This is not that they just have 1 month behind. This is that they actually have 3 months behind, and they had a notice of default filed, then 3 more months, and they had a notice of trustee sale, and then it went to the trustee sale. In 2009, 1 out of 43. 2010, 1 out of 25. One in 2011, 1 out of 31. So 1 out of 292 is way less properties in foreclosure than previous years. According to Adam Data Solutions, the strong labor market conditions and high home equity levels, will probably result in there not being a foreclosure surge. So if you are a prospective buyer, those numbers indicate that if you were to buy a property right now, those numbers of foreclosures indicate that there's not going to be a wave, so your property value is probably not going to go down in value. In 2005 and 6, we bought a property in 2005 and 5, and that property the next couple of years went down in value by it went to 50% of what we bought it for, and then over the course of the next couple of years or 15 years, it's increased even double to what we bought it for in 2005. So right now, if you buy a property, it's not indicative of those numbers that it's going to be going down anytime soon. And if you are considering selling the property, you're not competing with these foreclosed homes. These foreclosed homes that banks don't want, they want to get off their books and just let go. You're not competing with them or people that are in reverse or upside down. All right, second thing we want to go over is database reasons to buy. Now, as we went over in the last podcast video, it's pretty much always a good time to buy in California, except in those years when we bought in 2005 and 6. Over the last 50 years, properties go up in value by 6% in California per year average. So if you buy it right now, in 5 years, it'll be worth way more than when you bought it now, or 10 years, it'll be way more, worth a lot more. So these are just reasons based upon the dynamics of the market right now. And so let's go over them. So one is buyer and seller dynamics have shifted. So in blue, you can, according to Redfin, in blue, you can see the number of buyers that are on the market. And then in red, you can see the number of sellers that are on the market. So during the pandemic, you could see there was fewer sellers that are on the market and a lot of buyers. At that time, you put a property on the market, within 1 or 2 weeks, there was a rush of people who had already submitted offers. They'd make offers way above the asking price, remove their appraisal contingency, remove their loan contingency, and things of that nature. Now we have more sellers, right, than there are buyers, according to Redfin. So if that's the case, that's an opportunity for a buyer to ask. Let's look at the quote. The quote from Lawrence Yun, chief economist of the Association of Realtors. With housing inventory levels reaching 5-year highs, home buyers are in a better position to negotiate more favorable terms. More favorable terms would be time to get their loan approved, time to do the appraisal, time to do their inspection. They could actually negotiate to have the seller credit them for the closing costs, credit them for some repairs, or potentially make their asking price less than the asking price if the property's been on the market for a while. Okay. Someone asked YouTube user, how can I find subject to homes having a hard time? So a title company, thanks for the question. A title company could go ahead and give us the information as far as which properties have the certain rates. And then once we have the rates of that property, a specific seller that wants to sell, then you can find out if, and they want to sell, you have to find out if their loan is assumable. If their loan's assumable, then that makes it easier to do. All right. So the second reason why it's a good time to buy is the active inventory. We said in May. In May, you can see this year comparison to previous years. You can see there's more homes on the market now. So the quote from Jake Krimmel, economist at Realtor.com, says, with more fresh inventory hitting the market, buyers have better opportunities to find a home that fits their needs. That makes sense. The third reason is that price cuts are on the rise. We saw that in 2025, we see that there's more price cuts or more people lowering their prices than in previous years. And so the quote, thestreet.com says, although sellers have had the upper hand in the housing market over the past few years, houses are staying on the market longer, shifting negotiating power back to home buyers. So if we look back at that chart that we did, now there's less buyers on the market as compared to sellers. There's more homes on the market. There's properties that are dropping in price. Those are indicative potentially that it's a good time to buy if you can afford it. I mean, if you don't buy now, it's going to be, as I said, it's going to be more expensive in 5 years, and 10 years are more expensive. And would you rather buy when there's a few people buying and there's a lot of homes, or would you rather buy when it's like other years where there's less homes on the market and a lot of buyers? It's your choice. All right. Third thing we're going over today is why people are selling even though they have a 3% interest rate. They have a 3% or less interest rate. The rates now are in the high sixes. They've been in the high 6, 7s for like 3 years now straight. Why would you, everyone says, why would I give up my 3% rate, my 2.5% rate in exchange for a 7% rate? We can see that last year there were 29% of mortgage. First of all the properties, 30% are paid off. So of the 70% that have mortgages, 29% of those had a mortgage rate that was below 3%. And there were 12% that had 6% or higher. Now it has shifted. There's only 20%, 20.9% that have a 3% mortgage, and then 18% have a mortgage that is 6% or higher. Why are people moving their 3% mortgage in exchange and giving that up? First of all, if you don't want to give it up, don't give it up. You can rent out the property if you want to move. If you have a strong desire to live somewhere else or a necessity to live somewhere else, you can rent out the home and then move. I'd be happy to rent it out for you. So a survey from Realtor.com helps shed light on that. It shows 79% of homeowners considering selling today are doing it out of necessity, not because of the rates. They do it because they have actual life needs. Here's the top reasons, according to Realtor.com, that people today are considering selling. And so just real quick on that, on rates. My wife and I have bought a number of properties. Never did we say we're going to wait for the rate to get to this point before we bought. We bought when we first got married. Then we decided to become investors, and we looked for opportunity. Didn't matter what the rate was. We looked for what the opportunities were, and we had the financial means and wherewithal to do it. Then we had children. We wanted to get a bigger home, so we didn't care about the rate. We just looked at what we financially could afford, and then got pre-qualified, and then saw properties, and then bought a larger property. Recently, we downsized. We didn't care what the rate was. We just went to a smaller property. All right. So the reasons why people who are moving from a 3 to a 6, 7, here's the reasons. 46% are looking for a different community. 36% to make a profit. 34% need more space. 25% need to downsize. Potential buyers have shown interest in my home. 21%. And 21% need to move for my family. Okay. So the mortgage rates are projected to drop. They've been saying this. These forecasters, Redfin, National Association of Home Builders, Mortgage Broker Association, Wells Fargo, Fannie Mae, they've been making these similar projections, even projecting a lot less drop over the last 3 years, and the rates have not dropped. If you're expecting the rates to drop soon and you see that there's someone said that the rates are going to drop, I'm going to wait for it to drop. You can't predict it. They can't predict it. They've been wrong the last 3 years. If you're considering moving, you have to consider what would it do for me if I lived in that different community, if I was going to be making a profit, if I needed more space, if I needed to downsize. How long am I going to wait? If these are strong desires for you, how long am I going to wait before I look at a different community, before I make that profit, before I get that space, before I downsize into a smaller home? Okay, before I move for my family? That's a question for you. Anyway, I appreciate you coming. This last quote. According to Realtor.com, nearly 2 in 3 potential sellers have been thinking about moving for over a year. If you're one of them, how much are you willing to put pause on your life before you make that move? As I said, the longer you wait to make the move, the more expensive the next property is going to be, the higher the taxes are going to be, the higher your initial insurance payment is going to be. So thanks for coming. If I am a real estate agent and broker, if you like this video, see value in it, share it with someone who might be interested in learning about what's going on in the market. I have some links on my signature now, and also I'll put in the bottom of the video. When you are ready, here are a few ways we can stay connected or work together. You can follow me on my social media links. You can download my PDF of the services for selling a home, or property management services was a new thing we're doing now. And you can see my curated YouTube playlists. I have hundreds of videos about the home buying process and things to consider on buying for sellers en español para compradores y vendedores. You can also, if you like to talk with me, you can email me, or you can use the link to book a one-on-one phone or Zoom call. Anyway, I appreciate you staying to the end. This is 14 minutes. I'll try to keep them short if I'm the only one here. If I have a guest, obviously, I'm going to ask them some questions. Thanks for coming. Once again, if you saw value in this video, like, comment, subscribe, and I'll see you in 2 weeks. Take care. Have a great day.